In this video, we're going to talk about the 4 types of stock brokers, and your stock broker is a really important piece of the equation because this is what allows you to actually have direct access to the stock market. And the biggest question when it comes to stock brokers is the pattern day trader rule. The pattern day trader rule basically says that you need $25,000 to be a day trader. In other words, you get a few day trades if you have less than 25,000, but to have unlimited day trades you need $25,000 in your account unless you have a specific type of broker, and you do have a couple options. So if you have less than $25,000, don't freak out. You do have options, and we'll go through those and talk about the pros and cons of each one. Okay, so kind of an overview of the 4 types of brokers. Number 1 is what I call a professional PDT broker. In other words, it's a broker that adheres to the pattern day trader rule, which says you need $25,000 in your account to day trade. But they are a professional broker, so they typically offer good commissions, great service, great platforms, and so on. Then you also have non-PDT brokers. So basically a broker that says, okay, you don't need $25,000, and these are typically offshore brokers, and we'll go into some detail about those. Number 3 is what's called a prop trading firm or a proprietary trading firm, which is basically a private company that has pooled funds that they allow their traders to trade. And then you have retail brokers, which are, again, kind of the big boys that you see advertising on CNBC. Okay, so professional PDT brokers. Typically, they offer the best trading platforms and data. And an example of this would be TradeStation and Interactive Brokers. TradeStation is both a software platform, so they're really famous for their platform, but they're also a broker. Interactive Brokers is a really popular broker, but as I mentioned in the last video, their platform is really not that great. But as far as just the brokerage side, typically they require $5,000 to $10,000 to fund or open an account, and then $25,000 to day trade because they are a PDT broker. They usually offer good to great commissions. Usually the bigger size that you trade, the better rates you can get. Your funds are typically insured or secure because it's a US-based company. And they offer really great service, at least TradeStation does. I know Interactive Brokers, you're basically a number, but with TradeStation and some of the other PDT brokers, you typically have a dedicated account manager or broker that you can call up and talk to about issues. And, the one thing I'll say is the list of great brokers is always kind of changing. You have new players that come in that are better than others, and you have old brokers that for whatever reason just aren't as good anymore. And so we'll talk about that in a second. But moving on to non-PDT brokers or offshore brokers, you can typically open an account with as little as $500. So this is a great way to get started. And I know quite a few people that have started with $500 or $1,000 and turned it into a nice account and then have built that up. One thing to keep in mind is even though it's an offshore broker or a non-PDT broker, you can still typically get good platforms and good data feeds. Now the downside here, and I don't have a lot of experience with this, but a downside to having an offshore broker is there could be higher risk. Sometimes they're insured, sometimes they're not, and again in another video we'll have a list of the brokers that we know of that are currently active, currently in good standing, and have good service and commissions. Now sometimes with the offshore brokers they'll have higher fees, like $100 to say withdraw your funds from an account. And so if you only have a $500 account and they charge $100 to pull money out, that's 20% of your account, right? So the idea is to put money in it, grow the account so the fees don't matter. All right, if you're going to be a professional trader, really, $50 or $100 here or there shouldn't matter in the long run. Prop trading firms. Okay, this is really interesting. A proprietary trading firm, it basically works like this. You typically make a capital contribution, so you give the company a deposit or a contribution of anywhere from a couple of $1,000s to $20,000 or more, and then you actually trade with company funds. And so what this does is, say you make a $2,500 deposit with a prop trading firm, you can actually get around the PDT rule because you'll actually be trading with company funds. So it's not like you're just trading your own account. You're making a deposit, and you'll typically keep 100% of the profits, maybe minus some really marginal fees, but the losses do typically come out of your capital. Okay, and sometimes you need to be licensed to trade with a prop firm, and with others you don't. You can use your leverage to grow quickly. So that's another big benefit, is prop trading firms can offer higher leverage because you're trading their capital. And what they do is they typically have tiered systems where they say, okay, if you trade at this performance level, you get this much capital and these many trades. If you go to the next tier, then they give you better and better risk and bigger size to trade. So the risk really is on them to make sure that you don't overtrade or don't blow out more than you've deposited with them. And so they're basically a broker. They make most of their money on commissions, and it can be a really great option for somebody who has less than that $25,000. Now the final thing here is retail brokers. And a retail broker is in a lot of cases the same as a professional PDT broker, but I like to call this its own category because I'm not a fan of most retail brokers. And again, if you have an account with one of these people, I'm not saying they're bad, but they typically don't have the best execution. Sometimes they have higher fees, higher commissions. I know some people will charge $10 or more for a trade, where you can get that with TradeStation, $1 to a couple of dollars. So if you're day trading, sometimes it doesn't make sense to be with a lot of these big guys like Fidelity, TD Ameritrade. I know Scottrade and E-Trade have stepped it up quite a bit over the past few years. So again, we'll have a list of active brokers that we'll kind of keep updated in this lesson, just to let you know kind of where everybody's at, because again, it's a moving board. Things are always changing in the brokerage community. So some key points to consider. The first and most important is the pattern day trader rule. Do you have $25,000 to trade with or more? If not, look at either a prop firm or an offshore account, so you can start building your account, and when you do get to that 25K, then maybe move into one of the other brokers. Commissions, when you look at a broker, you want to know what commission structure they're going to charge you. Data in the platform. What platform are you going to use? Is the data good? Service. Are you going to have a personal broker that you can call, or is it a general customer service number? You just want to have these things well thought out ahead of time. And is their short borrow list any good? Basically, can they short NASDAQ stocks? If so, how does their short list look like? Can they trade over the counter, OTC, or pink sheets? And if not, I wouldn't freak out. A lot of brokers just don't want to play in the penny stock game because they know there's more money in real companies, in NASDAQ companies, or NYSE or Amex companies. But that doesn't mean that you should totally disregard penny stocks either. And finally, are you going to be trading in an IRA or a regular account? My wife and I actually have several accounts, some that are IRAs that we just trade for retirement, others are regular cash accounts, and we typically have different accounts set up for different strategies. So we'll have one account for an income strategy with our goal of being able to pull X dollars amount every month or every quarter as income. We have others that we're just doing capital growth, others for retirement. So you want to have those things thought out as well. There's also no one-size-fits-all broker. That's why it's important just to go through those things, really think it out, and check out the current list in this lesson. And I always like to say multiple accounts are better. Not everybody opens multiple accounts when they get started, but over time it might be nice to have 2, 3, or 4 accounts for either different strategies or different trading purposes, or just in case one broker has better borrows than the next, or if one broker trades a certain way. You'll figure this out, but the idea is just to get started, set up your first account, don't overthink it, and you'll do well. So hope this was helpful. See you in the next video.